All this week, we're getting you ready for investing in the new year by bringing back some familiar Market Monitor guests. And tonight's guest likes 3 large dividend-paying stocks. Last time she was on in September, she recommended Microsoft, which has risen 11% since that time. She also liked Palo Alto Networks, which is up 8%, and Broadcom, which is 11% higher. Nancy Tengler is back with us tonight, of course, Chief Investment Officer at Tengler Wealth Management. Good to see you again, Nancy. Thanks for joining us tonight.
Oh, you too, Bill. Thanks for having me.
And so we're talking dividends tonight. You start with United Technologies. You like UTX? They have a pretty good dividend, don't they?
Yeah, it's about a 2% yield. The company just announced an acquisition of Raytheon. Investors didn't like that news, but we think it's going to improve the balance sheet and decrease risk in the company by increasing exposure to aerospace. So this is a CEO who has been very good at acquisitions, Rockwell included. They raise the dividend handily every year, and investors are going to get Carrier and Otis spun out next year, so they'll get 2 additional holdings.
Okay. You're sticking with Broadcom. You mentioned it last time. It's up 11% in the meantime, and you're staying with it. Why?
Well, I mean, this is also another CEO you just don't want to bet against. Hock Tan did the Computer Associates acquisition that had investors kind of up in arms, yet he's paying out 50% of free cash flow, raised the dividend 23% this week. They made the announcement, and it's grown the dividend at about 50+% over the last 5 years. I don't need a lot to go right or with a 4% yield in this company. It is in many of the sweet spots, and with trade tensions easing, I think this is a place investors will be glad they were 2, 3, 5 years from now.
All right. Finally, the current king of all media, I guess, Disney, which really is not known for its dividend. It's only 1.2%, but you can't argue with the total return you're getting right now, huh?
Yep, and they're growing at about 8% a year, Bill. I mean, the 10 million subscribers on day one was an important milestone to hit, but we think they're going to hit their target of about 60 to 90 million 5 years out, and they're going to be, doing it without impacting margins materially because they're not paying for content with cash they don't have, like Netflix does every year, to the tune of $3 billion in negative net cash flow. So we like this for the theme parks, for the movies, and for streaming. And Bob Iger is a great manager and leader, so we're going to stick with our holdings.
Once again, the CEO for you is an important component in that decision-making process. Nancy Tengler with Tengler Wealth Management. Again, thanks, Nancy. Good to see you.
Thanks, Bill.